Hello and welcome to Property Matters. I'm Stephen Galpin and I'm joined today by Simon Gammon, Managing Partner of Knight Frank Finance, and we're going to be talking about mortgages. Simon, welcome.
Thanks, Tim. Nice to be here.
Good to have you here. Simon, before we get on to the future and what we might think is around the corner for us, perhaps we could look at the last 12 months or so, taking you back to the mini budget. I think all our woes started there,
Yes,
did it not?
It did.
As somebody who is effectively placing mortgages for both lenders and borrowers, what were the major effects of that mini budget for you?
Well, I think it was the biggest change we saw in a short space of time since the global financial crisis. We had inflation rising rapidly. We had banks very unsettled by the mini budget, and the markets were hugely unsettled. And what that generally tends to do to the mortgage market is the lenders pause, they pull out, they withdraw products, and we saw a huge number of mortgage products withdrawn from the market in a very short space of time, in line with mortgage rates then going up, as inflation did. So in a very short space of time, we went from an environment which was reasonably stable, mortgage rates were very good, and suddenly they were rising rapidly. From a mortgage broker's world, that meant working incredibly hard to try and secure the rates while they were still around for your borrowers.
Right. I mean, the thing that struck me about that mini budget, I was so surprised that one person's speech, one person's sort of plan for the future in terms of finance has such a devastating effect right across the country in so many different factors, didn't it? I just don't know how that happened.
Well, I mean, I'm not in government, but from what little I understood, they just didn't check what they were saying, and they ignored the internal opinions, and we all saw the results of that.
Yeah. Do you think there was friction with the government and the Bank of England, for instance?
Oh, I'm sure
over
there was.
that?
I'm sure there was. And I speak to the Bank of England occasionally, and the clear frustrations were there. They have a very difficult job to do. They always get criticised, but
Yes.
ultimately it's their role to try and be independent from government, and that's very difficult to do when the government are making mistakes.
Yes. And mistake it was.
Mistake it was.
Okay, so we learnt from that. There were devastating effects for many people, borrowers in particular, who were coming up to time to remortgage after fixed rate periods. I mean, I go back quite a few years, and I can remember when we had the 2010 problem. I had a tracker which was 2% below base, and I was actually getting a check. I was getting a check from the building society for living in my flat.
Yeah.
It was absolutely fantastic, but. Unfortunately, so many people suffered very, very badly from that. And as a brokerage, did you get involved with helping people out of those situations?
Oh, absolutely. I mean, we're still doing it now. I mean, we went from being mortgage advisors to counsellors in many ways. And what we have to remember is that there were something like 4 million people that bought their first home between the global financial crisis and the mini budget. 4 million people had never experienced a mortgage rate really above 2%.
Yeah.
And suddenly it was at 5 or even 6%, which is, as you can do the maths, doubling or trebling the interest that they were having to find. So it was a huge impact. There was a huge impact on a number of people, and that's still going on today. We've still got a lot of mortgages that are what I would call on one of the older rates that have yet to mature and will do over the next 1 to 3 years.
I mean, I go back some years, and I mean, I was always sort of educated to think, if your interest rate was below 10%, you were doing fine. And I think what I've realised or learned over the years, actually, the specific rate doesn't matter. It's the rate differential between when you started and when you finish, isn't it? That really matters.
I think that's right. And also, people are trying to always, spot the market, pick the best moment to take their mortgage fixed rate and everything else. My view is, if the rate is affordable to you and it is based on all the information you have at the time, the right deal for you, then that's a good deal. You can't predict the future. This is a world now with so many dramatic changes around the world, so many macro influences that affect the mortgage rate that you pay. it's impossible for you to guess. So if it's affordable, we would recommend you went with it.
Okay. Now, we have a lot of people come into Property TV, do programs with us, and one of the common complaints right through the residential market in particular is the length of time conveyancing takes, getting between sort of reservation, exchange and completion. And I think we're somewhere over 6 months now as an average. Now, when I talk to various people, depending on which side of the fence they're on, they all have different views. But one common view is the fact that lenders, since that mini budget, are asking so many more questions about the borrower, about the property, about the security value, that this is what's pushing the time back. Would you agree with that?
I think it's certainly a factor. I wouldn't say it's the only factor. I think there's, solicitors and lawyers have found more questions being asked of them, and more time is being lost as a result of that. But unquestionably, the lenders are asking more questions at the underwriting stage to assess whether it's affordable. We have, to a degree, COVID to blame for that, because there was a lot of people whose income changed a great deal as a result of lockdowns. And if you're self-employed in the wrong sector, the hospitality, for example, your income was unquestionably affected. So that made the lenders ask more questions, and that has in turn led to this elongated completion phase.
Okay. I mean, do the lenders who are, shall we say, banks, I mean, sorry, just go on that subject. I mean, one of my pet things is that I think borrowing for the purposes of a mortgage has got more difficult since we lost the building societies. I thought they were a marvellous institution. They knew the area you lived in. They probably knew more about you than you did. Whereas the banks tend to be a tick list according to how they feel their place in the market is at any one time. And I think something like home lending shouldn't be subject to sort of bank vagrancies in terms of their marketing strategies. So I like the building societies. But I mean, has it become harder since that mini budget for the guy in the street to get a mortgage?
It has become harder. And you can see that in two ways. Firstly, the number of questions that we mentioned earlier, but also the amount of people in the UK that now use a mortgage broker in order to secure their mortgage, because they found it so much harder. With changing criteria, rapidly changing products, more questions, it's incredibly difficult to navigate the mortgage market in the UK, and something like 85% of all mortgages now are distributed through the mortgage broking community.
Right.
Doesn't make it easier for the mortgage broker either, because there's so many changes to keep up to date with.
But I mean, when you talk about credit today, I mean, a lot of credit decisions where it comes to hire purchase or car leasing, that sort of thing, that there are 2 or 3 of the leading credit reference agencies who report. And one of the strange factors is that actually, if you don't borrow very much, you're probably not a good risk. You've actually gone down. Yeah. Does that actually apply in the banking world to mortgages too?
Absolutely. So if you have no debt, never had a credit card, never had a personal loan, you are in the eyes of a bank, potentially a worse risk than someone who has had multiple credit cards. As long as they've been paid on time and you haven't gone into arrears, you've shown yourself as someone who can manage debt.
Right.
And therefore you're a better risk from a mortgage point of view.
Right, okay. What a difficult world we live in. Great, okay. Now, I think the other thing that I just wanted to clear up, I suppose, before we go to part 2 of our programme, where we talk about the future. Mm-hmm. There was so much worry after COVID and that mini budget that there was going to be so much bad debt in the mortgage market. Has there been?
Not really.
No.
And I think the reason for that is that when people came out of the global financial crisis, the banks were asked to stress test anybody they gave a mortgage to. Mm. And they generally did that at a rate of about 5%. So it was, in the bank and the FCA's eyes and the regulators' eyes, it was okay to lend to someone if they could see that regardless of what mortgage rate they're borrowing at, 1 or 2%, if they could afford it at 5%, so these were post-financial crisis rules, then it was a good lending proposition. And of course, what we saw then is when the mini budget happened and rates went to 5%, while it meant everybody's life had to change to afford their mortgage, it was broadly just about affordable. You may have to cancel the Netflix subscription or other discretionary spending,
Yes.
but most people could just about afford their mortgage, maybe through life changes, but they could.
Yes.
And that's why we haven't seen a huge spike in mortgage arrears and particularly repossessions.
Okay.
I think if rates went to 6 or 7%, the country would be in a very different spot.
I've always thought that since those days of mistrust and her budget, probably one of the most vulnerable sectors of the housing market was the shared ownership part, where a young couple have probably got a rent to pay and a mortgage to pay and rising interest rates.
Double whammy.
Really unsustainable.
Yeah. I mean, really, there's a large number of sectors that have been affected by this, but you're absolutely right to highlight that group as one of the most vulnerable, without question.
I think I have to say that if advising anybody, I really would stay away from that sector of the market. I don't think it's good for young people to just buy a home for the sake of buying a home. And the only trouble is you can say, yes, well, it's going up in value. Your half is, yes, but you've got to sell it and you've got to find somebody else that wants to buy half a house. You know, that's the practical problem, isn't it?
Absolutely.
So there we are. Okay, well, look, we've dealt with the past. So after the break, we're going to look at the future, Simon, if that's okay.
Yeah, I look forward to it.
Good. Okay, well, join us after the break. And as I've said, I'll be asking Simon about what he sees coming in the future. Hello and welcome back to part 2 of Property Matters. I'm Stephen Galpin and I'm joined by Simon Gammon, Managing Partner of Knight Frank Finance. Welcome back, Simon. Simon, we've talked about the past, we've talked about some of the problems caused by the mini budget, I should say. What are we looking at for the future? And I have to say, for the benefit of our viewers, you're in a unique situation. You're part of the Knight Frank group of partnerships, which represents a huge share of the residential market. You've got, I know, a fabulous research department. So you really are well placed to look at the future. So where are we going?
I think we're moving into a period of more stability. I think confidence is quietly returning. We need to see the base rate, Bank of England base rate, start to drop to help that confidence. And we don't know at this point when that's going to be, but hopefully in the next few months we'll see that start to fall back. There have been a number of people who have held off making a property move because of the way mortgage rates have been, by the interest rates, the cost of living, and now we've got inflation back at a more sensible level. There is a pent-up demand. We don't know how large that pent-up demand is yet, but I think as confidence starts to return, in my experience, in my career, when I've seen confidence return to the property market, it generally tends to happen quite quickly.
Yes, I agree with you.
And so I think, and I'm hopeful that come the autumn of this year, we will start to see things moving much more positively.
Okay, one of the things that it always occurs to me that the government doesn't grasp is that it's all right helping one sector of the market, but unless you help it all,
it doesn't move.
Doesn't move at all,
No,
does
it? Doesn't, no.
So it's all right saying, well, let's have loads of first timers and get it going there. But if the people up the chain aren't moving,
correct,
doesn't work, does it?
And it's not just up the chain; it's the people then downsizing at the top, and that needs to flow as well.
Yes.
So I think one of the things that we've got in the future, which is at this point uncertain, is our new Labour government have not laid out all of their tax plans. There's talk of them playing with council tax. There's talk of them playing with other personal taxes. And until we know what that is, some people will say that uncertainty isn't, they're going to wait, and that doesn't help the property market.
My personal feeling is we need a a root and branch look at the whole of the property industry. I mean, I see here, we're in Canary Wharf here, a lot of rented apartments. I still see cut and pasted leases,
Yes.
which in these 70-story buildings says you shall clean your chimney every month and keep the lawn mowed outside, you know. Totally unsuitable. And I think we're in a time now, which I hope the Rental Reform Act would help, of getting new leases and new ways of occupying buildings, taking into account people's wishes to have a sort of transient, you know, workplace, that kind of thing. And I also think that the government needs to be mindful that the whole market needs to move. So therefore, it's no good helping just first timers. I would like to see perhaps stamp duty paid by the seller rather than the buyer. I think that way it gets self-financed.
Yes.
Whereas you must hit the difficulty where somebody's got a good deposit, they've saved up, and oh dear, the stamp duty is the killer. They can't do it because no bank will finance it.
Yeah, no, correct.
So that's my view. And I also think, just on top, just to give you some more ideas of where I'm thinking about, I'd like to see the land registry become a one-stop shop for information. So you have your contamination, you have your flood information, you have everything else, all housed and looked after by land registry, which solicitors could dial into for a, you know, subscription fee.
Yep.
And it would be a one-stop shop for everything.
Well, that would certainly save time
It
for
would.
the transactions.
Now, I don't know what you feel about all that stuff. But
Well, just a couple of points I'd make. Firstly, going back to the Rental Reform Act, which is being talked about now, one thing we've just got to be mindful of there is the private landlord, because if they make it too onerous for the private landlord, the impact of that we might see more property come to the market, which is not necessarily a good thing.
No.
It could mean that house prices then fall. It could be that it's even harder for a renter to find a rental property, which means rents are going up.
Yeah.
So we've got to watch that one carefully, and I hope the government will be alive to that. But I think overall, you know, we're in a place where it's an improving picture. I'm personally pretty confident about where we're going. I think the government have set their stall out. They're talking about building 1.5 million new homes. Every government has talked about building 300,000 homes a year, and that's what they're trying to do, but we'll see.
I do wonder, I mean, we've got wars going on around the world. We've got Ukraine that's going to need rebuilding.
Yeah.
We've got Gaza the same. I just wonder whether we've got enough bricks to build, you know, because we're certainly going to see material costs escalate.
Yeah, well, we already have.
And we're going to have shortages of materials. Yeah. So I just wonder how far the government go into the practicality of these things. It's quite a difficult thing to work out.
You know, it's difficult. That's probably, you know, it's more a developer's issue. They probably aren't going to that level of detail, but I think there's going to need to be more innovation on how they build, possibly as a result of that.
Yeah.
And, you know, if you need to build a lot of properties, and if the government is determined to build all of these properties a year, if you flow that through in your thinking, that could mean more skyscrapers, it could mean more significant sized buildings, which won't be to everyone's taste.
No. Well, this is the difficulty with this change of regs on planning.
Yes.
I mean, I tell you what I can see coming is a conflict between local authorities and central government.
I couldn't agree more. I couldn't agree more. It's fine to create this wonderful new planning law, but if it's going to...
do you mean our grey belts?
The grey belts, yeah. But if on a practical level, you know, if that then creates a conflict on a local level where you have the sort of the NIMBYs saying, I don't want this on my land or my neighbourhood, or in my neighbourhood rather, and a policy that central government is saying to local government, you've got to follow, it's not going to work.
No. And I also think, again, we have a sort of myriad of people coming in here and talking to us about these things. And I think another difficulty over the quantum of houses being built is the complexity of architecture. I mean, years and years ago, there were certain firms around London, around the the Greater London area, that would build starter homes. Now, they were very square, very ordinary. You'd struggle if you lost your way home at night, wondering which one was yours. But they'd be lacking sort of character in terms of
but probably
architecture,
fit for purpose.
but fit for purpose and affordable.
Yeah.
And we've got so complex now with our architecture, and so complicated with it, that it must be a hold-up one way or another.
Oh yeah. Well, I think
even with the thought of looking at it,
But maybe a part of that is the fact that the architects and the developers feel they need to be producing very complicated homes in order to get planning.
Possibly.
And to get it through, it has to be a unique scheme. It has to be well thought through. It has to look beautiful, because they face nothing but challenges from the planning law.
But there again, that brings us to the planning process itself. You start off out of London with a parish council.
Mm-hmm.
They give an opinion, which is neither here nor there, because nobody takes any notice of it. It then goes to the local authority, the county council. Yep. The planners there, who are professionals, look at it and say, yeah, this is great, or one thing or another. Then you've got 12 lay people that say, nah, I don't like that. And I think we've got to smarten up that process. Otherwise, we're never going to get the volume, are we?
Well, I mean, one thought that I heard the other day, which I thought was probably pretty accurate, is to address that. What you probably got to do is, let's say a village or a town has been, through central government or local government, they've committed to building another 1,000 homes. I think the parish councils, the local lay people, would have the opportunity to comment on what that might look like, or what that how it might be constructed. But the very fact that the 1,000 homes,
not whether it should be,
exactly, the 1,000 homes is not up for debate. They don't have that influence.
Yeah, I like that, because one of the difficulties is that you don't want to create a situation where you've got Westminster telling a local authority what something's going to look like, how it's going to work, and all the rest of it, because they've probably never even seen the place,
and they won't know what type of people want to live there and everything else. So I think that's there's something in that could work.
Okay, well, look, we're coming to the end of the show, so I'm going to ask you the $64,000 question. Where do you think interest rates are going to go, and where are they going to settle?
Okay. I don't think we'll be back at the extraordinary rates of sort of 0.25%, 0.5%. I hope that, subject to world events, we will continue to see the world settling a little bit from an interest rate point of view, from an inflation point of view. Some of the data that is coming out looks positive. And so I'd like to think that the Bank of England base rate, which sits just above 5%, would settle back at around 3.5%. But it could well take a year or two to get there. I don't think we're going to see a dramatic drop. It'll be 0.25% at each rate drop. The first one, hopefully soon. And that will mean that mortgage rates will be comfortably in the 3%.
Okay, so will the mortgage rates religiously follow the bank rate?
Tracker mortgages will, but fixed rates tend to be based upon, most banks will use the swap rate market in order to secure their pricing on their mortgage rates, and that tends to be more forward-looking. So it's not as an exact mirror. If the swap markets think, for example, there's going to be a problem 2 or 3 years from now, or it looks like the long-term data says inflation's going back up, or just by way of an example, then they will start to price that in, and that will have an impact on 3 or 5 year fixed rate mortgages. Okay. But if their view of the future is more positive, then that means that you could have mortgage rates back in the 2%, even though the Bank of England base rate is 3.5%.
Okay. Well, Simon, I'm going to say a big thank you very much for coming in today. I'm glad to be ending on a note of optimism and a good look for the residential future. Join us next time on Property Matters, when we'll be discussing other things that are affecting the whole market. Very grateful to Simon Gammon, Managing Partner of Knight Frank Finance today. We've had an insight into the market and a note of optimism. So join me next time on Property Matters.